and welcome. You're watching Business Today Television. I'm Sakshi Batra. Well, the government's announcement of the next generation GST reforms definitely marks a significant step towards simplifying India's indirect tax regime. The group of ministers on GST have accepted some of Centre's proposals to move to a two-slab rate GST structure of 5% and 18% now. Of course, the report will go to the GST Council for further discussion and for final approval as well. There are also many key sectors which may see a reduction in GST rates, as is being indicated. Insurance, autos, cement, consumption, all of these sectors are in clear focus. The big question is, will this enhance affordability, boost consumption, and how will these sweeping reforms really impact you, your wallet and the overall Indian economy? That is what is going to be the focus of our conversation in this special edition today. Joining in will be top industry experts and economists to help us decode what GST 2.0 could really usher in. So let's welcome our first guest on the show. Mr. Tarun Chugh, the MD and the CEO of Bajaj Allianz Life Insurance Company, is with us on the program. Warm welcome to you, Mr. Chugh, and thank you so much for taking the time out for this very critical discussion. Let's start off by understanding as to what we are given to understand from the GOM meeting. There are statements coming in that the GOM has actually considered some of the states' recommendations or proposals to exempt life and health insurance from GST. How would you think of, what's your first thought on this, sir?
I think this is a very positive move forward. The industry really appreciates that the overall GST rate will come down from the current 18%. The discussion is that it will be exempt. There are some nuances there, of course. We need to understand the fine print. But net, the beneficiary is the customer. It will benefit the customer.
It will benefit the customer. Can you help us understand what will be the impact on the insurance premiums if GST is completely removed? At present, every time we buy a new life or a health insurance plan, we do pay an 18% GST on the premium. So if our annual premium is anywhere between, say, for health, if it is 20,000 rupees, then additional 3,600 rupees is what we pay on, 20,000, and the total cost that we have to incur is 23,600. Similarly, if we have to pay for life, which is even lower, say somewhere around 10,000, then, it's about 1,100 or 1,200 rupees with the taxation. What will be the effective cost of such policies now, sir?
Yeah. So what we have to understand is that the GST is to be paid on the term component, the amount of cover, and it is currently at 18%. The GST rate. If somebody was paying 100 rupees as a premium, this was becoming 118. So hence that was passed on to the customer, and a 100 rupee thing became 118. But what is awaited really is the details of how this is coming out. Because GST, we have to understand, is not just on the final good that is sold or the service that is sold. It is on the input cost as well.
Yes.
Because to make the entire product, you have a set of components. There is a reinsurance cost, there is a commission, there are other elements that go in, and the net GST has to eventually come down. That detail is not yet out. So till that is out, we can't really comment entirely. But overall, I do feel that because the GST amount will come down, the benefit will be available for the customer.
Okay, so just let me prod a little bit more. There have been some concerns from some of the industry players about the loss of input credit due to complete GST exemption. There's also a thought process that in case there is a complete GST exemption, there could be also a resultant increase in the base premium because insurers will need to pass on some of the costs that they have been incurring, which used to get offset because of the input tax credit, but now will not be able to, be used. How would you explain that, sir?
So that point you've mentioned is absolutely correct, and which is what we are waiting for the details to come. Because like I said, GST is not just on the output, it is on the input credits also that are currently netted out. So that net has to be passed on to the customer. At this point in time, that clarity is not there. So till that credit benefit going, clarity comes on that bit, it's little difficult to comment that how much will be the benefit going, will the premium come down or not. But net, I do expect that the overall, because the sum of parts have to be less than the whole. I think that's what we have to see. And that is what we expect. It will be lesser. How less, we can't say, because the credit we have to understand.
Okay, so let's try to simplify it for our viewers as well, sir. Let's take these two scenarios, 5% and a complete exemption. Could you break down for us, just for a ballpark, do not help us understand to the T, but like, ballpark, what will happen in either of these cases to the end consumer from the outgo perspective that they have to do on premium, sir?
I think that's a very good approach. So, in fact, let me explain three scenarios. One is the current one, the 5%, and the 0%. The current one allows for a lot of credit inputs. So those exemptions that go to the entire GST bucket are available there. As a result, the net what goes to the customer is the 18% as of now. But in the case of a zero, let me take the extreme one, the new one that is getting talked about. Mind you, it's not final, so we don't know. There could be elements of credit they could give us on the sub parts, because there is a reinsurance part we pay, there is also commissions that we pay. Both these services that are included within the main manufacturing of a term plan requires GST to be paid. So in case they allow us that benefit, then all of this will be passed on. But I don't expect that it is going to be so sweet. What I would have expected is, if it is 5%, then within 5%, if the credit was allowed for all those other input costs, it would be a lot better. But let's see, it's to be seen yet. So, but net, both these scenarios, the 5% and the 0% will be better than the current one. How better is dependent on the, how much better will be based on the credit input.
So as an industry, you would have preferred a 5% rather than a 0%. In any case, you're saying both 0% and 5% will benefit the customer because it's way better than the 18% that we are at right now. As an industry player, would 5% have been benefiting the industry also in some extent?
See, I can't really pinpoint and say that till the input credit equation is not solved. So 5% with no input credit is also not good. And with 0% with some input credit being made available, like maybe even reinsurance rates, for example, we pay, that could be exempt, for example, as well. That will be great. So that takes away a lot more, the GST impact that is currently there.
One of the things that we all have been looking at from the insurance industry perspective is that we still say that we are way underinsured when we compare to the other economies. Do you think this step on GST rationalization will aid in any fashion in increasing or improving the penetration of the insurance industry, sir?
Absolutely. Absolutely. There is, on this point, there is no doubt, any reduction of cost will help in the expansion of insurance. Insurance by 2047 is the motto that the insurance industry, under the guidance of IRDA, has taken on. And it will surely help this entire process. And it's a positive step forward.
Positive step forward. How would you advise fresh policy investors at this point in time? If somebody was thinking of buying a policy right now, should one wait it out till clarity emerges, till October, to buy health or life insurance? What exactly would your advice be?
I think it's a little difficult to say how long. One will have to wait or not wait at all, because still we don't have any clarity. Nothing can be really said. I think the meeting is happening mid-September when we get to know some details. And then also they will possibly give us a lot more time to set of systems because you can't just start next day. There'll be new systems that will have to come up. And we'll have to see the input credit details. I'm sure there'll be back and forth in discussion with the GST Council as well on this. So, impact in terms of really getting implemented will take a lot more time than just suddenly happen tomorrow. It's not a switch on and switch off.
Okay, tell me, explain to me what about the existing policy holders? How will they expect changes to incur? Will it reflect on their existing policies as well, sir?
That is another bit that is not yet clarified, Sakshi. That's a very good point you raised. I hope so. All these will get clarified in September. If an existing policyholder, for example, who's been confirmed a certain premium which is getting paid with GST, on the face of it, should benefit on the existing money that he or she is paying. But having said that, insurance is usually a contract for life. So things do get fixed for life. So when the insurance policy originated, whatever remained will remain. But in the case of GST, this is an annual tax. So it's a little complicated. Now, they could take it differently or they could give a benefit for the past premiums as well. So it's a little difficult to comment. But on insurance, I always say a simple mantra: please keep paying your premiums. Else, there could be, there could be a little bit problems because you may not know of a possible eventuality because it's a risk which is not really easy to define as to when is it going to take place.
Okay. Mr. Chugh also explained to us, apart from GST rationalization that's slashing the GST rate on insurance products, both health and life, to either 5 or nil at this point in time, what are the other areas that you would expect the government and the GST Council to really consider when it comes to taxation or indirect taxation, apart from the cut specifically?
No, I think this is another brilliant question, Sakshi. So we should look at GST as a package. GST is a package, and we should look at all the components of a package. Just saying that, at the end of the package we will have lowest GST, but to build that package there were components where we were already paying tax. So all those components have to be taken in. It's a good thing to say that the headline number will be less than 18, which is a good thing because overall payout will be less. But having said that, if there was benefit available on reinsurance, benefit available on commissions, and the other costs that entail GST, I think that will be a better way to approach it. Although, I must say, we are quite happy with the fact that already the industry is being looked at from a positive sense. Bringing down the GST by itself is good.
Could you also just beyond GST help us understand at the current realm, what are the current trends that you are seeing as emerging in the life insurance industry in terms of any understanding of where we are at and how do we see going forward the growth outlook, sir?
So on the Act, we are awaiting with a lot of bated breath as to what is going to be coming because there are a lot of big things that are talked about. There are discussions around a composite license.
Yes.
There is a clear direction of which we are sensing on 100% FDI. These two significantly will be huge. There are things that we've been proposing on the distribution side, how we can, kind of unleash the entrepreneurial spirit in distribution to be able to take it to the masses in India, because that's the only one we have to achieve to be able to get to insurance by 2047. So that is something that we are waiting with bated breath. We were expecting it will be introduced in the monsoon session. It hasn't been. Let's hope it is introduced by the winter session. But fingers crossed and bated breath is the two set of terminologies I would use here.
Fantastic. Mr. Chugh, it's been an absolute pleasure to speak to you and seek such wonderful insights. Again, thank you very much, for all the time that you have spared for us. We'll definitely speak again with you once we have more clarity on the developing situation on GST rates as well. Thank you so much. Truly appreciate your time, sir.
Thank you, Sakshi. Thank you so much.
If you like the video, do like, comment, share and subscribe.